Hello guys, as I expected last night when we have done the live Sunday at 8 o'clock, I told you that the market is still in trouble and the coronavirus news are still there. So even though today the market was going, it was going down since Friday, but in the beginning of the day it was going up a little bit. I can see it in the morning, but it collapsed again, and Dow Jones has lost a lot more. So now, if you can think about it, the market is doing the same as 2008. And the measures that the government has done by doing zero interest rate for the federal government, it means it is a help for the banks to get money for free. It means they get the money. I'm not saying they get it for free, but they get the money and they don't pay the Federal Reserve Bank. They don't pay interest rate. It means they do business without any risk. Okay? And for the people, it is a good thing. I'm telling you, for the people, it means the normal people who want to do refinance. The interest rate will drop too much. So it's if you have, for example, in January, if you have a high interest rate like 4% in your mortgage, you can change it maybe to 3 or to 2.50. It depends on the banks, and you can shop. You can shop for refinance. This is very good, because there are some situations that it will never come back each year. For example, in 2008, when the market is going down, 2009, 2010, 2011, all the people who bought houses, they were winners because they get the best interest rate through 10 years or 20 years. So this is happening now. So people who want to buy a home, or people who want to do refinance, or to buy a good car if they want to, this is the time. It means after 1 month, 2 months, 3 months, you will see online the interest rate, and it will be very good. Now, 2009 was doing good as 2020. It was doing good as 2018. Okay? As 2018. It was doing good in January. And then in February, it collapsed. And I have made a live on that time, and I don't feel very comfortable. This is the first time, 2018, I don't feel comfortable about the market, that there is something coming. When I see analysts saying just buy, I understand that there is something going on, and understand that this is business. They will never tell you. So the masses, they just buy and buy. And then now, especially investors, they buy with the highest price. Now the prices go so down. Okay? So it's as if you are doing the opposite of an investor. What the investor will do. The investor will buy cheap, and then he can sell high. But right now it was high. People have been investing high, and then they lose a lot of money. See, for example, Apple, Facebook. Now let me just show you today what did happen. It says from 1986. Dow Jones has never gone down in one single day like today. So I will show you the chart just to make sure you understand. So this is the chart. So 29.62, it means 12.76%. Have you ever seen the Dow Jones? Here we are speaking always about the ETF, because the ETF you can buy long, you can sell short. That's why I use always ETF. I don't use the general index. Okay, it means as the index, which is with thousands of dollars. So I'm always using what we call the ETF, which represents the Dow Jones. Now, as I told you yesterday, guys, I sold my shares in my trading account and in my own portfolio here on this Friday, which is a Friday 21st. I sold all my shares going long. And you tell me, how do you now? This is a secret. This is a secret of my rules that I apply. And when I see something dangerous, although here it goes down, but I didn't sell. But here I sold. Now, when I sold on the 21st February, the next Monday, it collapsed. And it continued to collapse, as you can see. So, for example, Dow Jones was 295. Now it's 202. So what does it mean? It means it's like 32 or 31% of the whole market has already gone. Okay? It has already gone forever. So the future we will never know. So if we take, for example, Apple, 35%, it is 12.86. It's like Dow Jones. Okay? But in the morning, see, I will show you the 15 minutes in the morning. See, in the morning here, first from, it was 278 on Friday. Last Friday, this is when we hear the news. The market has been going up in 10 minutes. I have explained that. So after that, on Monday, it collapsed 241. Yes, 241 is the second thing. It was going up. I look at it. It was going up. And then it collapsed in the last 10 minutes. Again, it was collapsing. It reached the 259 from 240. So if you are a day trader, if you use this, only this, you can make a lot of money going up and you can make a lot of money going down. 12.86% is too much money in one day. This has never happened. $35 down. Okay? So you see, for example, Facebook also $24. It means 14.25 is weaker than Apple because it goes down 14.25%, which is too much. So this is the Dow Jones. Let's go to the day. And in SPY, it goes to 10% only. It is less than Dow Jones. The smaller stocks, Russell 2000, 13.27, which is nearly this, which is more than the Dow Jones. They are smaller. Normally, they can go more and more. Now, silver collapse. I'm telling you, it collapsed. It's 12.34%. But gold, it goes down only 1.14%. It means it didn't go that much. 1.14 compared to silver, which they get hit with 12.35%. This is so bad. Now, if we can talk about 2008, the market has gone nearly 50%, almost all the market, 50%. So are we going to go to this 50% or more? We will never know. Now, for me as a trader, what is how the trend will change. The trend will change, and the investors, they come back again to buy, and mutual funds, they come to buy, hedge funds, they come to buy when this coronavirus stops. Because this coronavirus news, it is spreading like a fire in a forest. So I see that the people are still selling short. For us, we have some stocks. We have some stocks that we are selling short. And yesterday, I told the guys in my subscribers that we are keeping the shorts until I see that the market redresses. Even if we buy back shares, it means we exit these positions, we can come back and sell short again. Understand that in this situation, if you are not a trader, if you don't know what you are doing, you should stay on cash. Stay on cash, it means do not trade. You don't know how to sell short, you don't know the risk. At least if you are interested to understand the mechanics of selling short, I have many ebooks and many training, day trading, and and inverse ETFs, how to do it, when to sell short. You can just try with few shares, just to practice. Because the opportunity, when it comes, it doesn't stay 5 years going down, okay? It can stay 1 month, 2 months, 3 months, 6 months, 1 year. It could, okay? In 1929, it stays many years, but the market was going up and up and up and up, and then after a few years, the market redresses, and it was very good. And all the people who bought in the other time, after a few years, they become rich, they become millionaire because they bought when the stocks are so cheap. And understand, if you ask me, what do you think about the market and stocks? I say this: the market in the future, we don't know when. It means it's not next week or next month. I don't know when it stops going down, okay? But when it stops down and is going up, it is not the same for all the stocks. There are some companies that they get hurt and they continue to go down, and this you should be careful. When the market is going, all the market is going up, like Dow Jones, S&P 500, Russell 2000, you should check your stock. You should check where it belongs, like an industry. You should check. Okay? You should check. Because when you check, at least you see, is it the whole industry is going down, or is it only your stock? If it is only your stock, and you bought this stock and it's still going down, it means that your company has a problem. If you are an investor, you should go to fundamentals and you should see what's going on. Never hold a loser for more than the market is going down. The market is going, for example, 20%. Your stock has gone 50%. It means that your stock has a problem. Your company has a problem, especially when you are an investor. Okay? So understand these things. You should take a learning. You should take a training. You should understand these things. Okay? It's not easy. It's not just someone in online tell you, oh, do this and do this. Okay? It will never help you because you will not understand what's going on in the market. The first thing, you should understand what's going on, and how do you understand it first. Because when you go to the news, everyone is saying what he wants to say. Someone, sell. Some others people, hold, the market will go up. But when? If you lose 50%, 70%, 80%, 90% of your stock, even if it goes up, how many years do you need? Maybe 5. years, maybe 10 years, maybe 20 years, maybe the company collapse and go bankrupt. Understand that. I have showed you many examples in the past when I follow them, and then I give alerts. I give alerts for Sears, I give alerts for JCPenney, I give alerts for GE, General Electric, and then they in 2018, and then they get kicked out from Dow Jones. You understand that? That things, you should understand the mechanic of the market. Selling short is part of the game. People sell short and make money. So there is no other way to make money. You sell short, you buy options, puts. Okay? These are the means to make money. So you go long. How you go long? There are exceptions when stocks. I have a stock that I have. Okay? Now it is going up. I don't know why. It's funny. It's funny. I just find these stocks and it's going up. I don't know how I discover this, but when I see it's going up, I continue. Even today, the whole market is troubled. I got like, I think 4 or 5%. Okay? So understand that sometimes I don't know if I am lucky or not, but most of my stocks are sold short, especially in my trading account. I showed the guys. I bought this. I sold the stocks short, not last Friday, but the other Friday. It means now they have about 6 or 7 days, because not this Friday, the other Friday. In my trading, in our trading account, we have been making money this week, and the beginning of this week is good. The stock market is going down, so we will continue. And all my subscribers are looking at my trading account. This is a proof. It means when you see what I am doing, you understand how things work, and I explain. This is the good thing, is explanation. Why I sell short now, why I didn't sell short in January, why I go long. Okay, it all depends on market movement, and especially on the news and the trend down. Okay, the market now is on the trend down, but we don't know when it stops. Now, when it stops going down and reverses, I will buy back my shares, and I will exit all my positions in the trading account. At least we get our money back, and we have a profit. And understand that in selling short, you have a lot of risks. So if you are new, you are a beginner, you have some money, please do not sell short a lot. Sell just a few shares just to see, to practice. When you are confident about yourself, you understand everything, then you can do whatever you want. Also, penny stocks. Penny stocks are very, very dangerous if you do swing trading. Especially now, everything is... You are selling short, you make 5%, 10%, and then you have a gap up that you lose all your money and you are in debt. Every time people, they get in what we call short squeeze. It means the stock was going down. You think that the stock is continuing to go down, and then we have short squeeze. So understand that there are a lot of risks. These risks you should know one by one. Now, when you trade, you are confident that whatever happens, you know before. But don't say the stock is $5. It doesn't go to $50. Don't tell this. It can. There is no rule in the market. The rule is you know your risk. But some people they like puts. Put options is better than selling short in one thing. Is that what you put, you can lose all. For example, if you want to sell short and you are like you are scared and you don't feel well with selling short, this is normal. You are right. You are right to be scared. Okay? Now, what about options? Options is very simple. Let's say you buy a put option on Dow Jones. Just an example, okay? Dow Jones is 200 something, 200 something. I don't know how much is the option, but you can take smaller stock like $30 or $20. You get it with $100 or $50 or $70 a contract, a put option contract. You buy this put and you leave it. You understand that if you lose, if the market reverses after a few days, what will happen? You just lose this $75. That's it, which is very good. But do not play with big money in options. For example, you have $10,000 and you say, oh, the market is all going down. Let's buy puts. You buy all your money puts. What if there is a gap up in the market, in stocks, for example? You see what happened to Apple on Friday. It goes $29 up. Do you understand what does it mean? It means your option will be worthless. It will be zero, except for the time, the extensive time that you have. Let's say $2 or $5. You stay 1 week or 2 or 3. So what I am saying here is that put options is better in the risk that you don't get. For example, you lose 75%, $75 or $50 or $20. There are some puts that are very cheap. If you want just to try, this is the time to try. Don't worry about it. If it is $20, $50, $100, just you try. If you begin to make money, you will like this. You will like, and you will be part of the game. And you will never say, these guys, short sellers, they are bad. No, they are not bad. They do what they have to do in the market. All the market collapse, people, they sell short. They buy put options. They do whatever it is good for them, because the federal government cannot stop short sellers. Today they say 15 minutes. Dow Jones, the exchanges, they have problem because all the people, millions of selling short orders, millions. That's why 15 minutes, the market stop in 15 minutes. Because we have a lot and they can't match sellers with buyers. And you say, you are telling me, who is selling? Everything is sold. Who is selling? Yes, because it's not people who are selling. It is the brokers. They take these shares and they give it to you. You sold them. And then when you finish selling short, you buy them again and you give it to them, and then they give it to investors. Because the investors who are holding their shares, they don't know that they are sold and bought back again, because they don't know, and they have nothing to do with that, because they own shares, they have shares. It doesn't matter. But selling short is what? Is the broker borrows shares from investors and give it to you as a short seller. Okay? But you should bring it back. That's why I told you, if there is a short squeeze, if you are selling short a stock, that it is penny stock, for example, and then it goes into a gap up, the broker will have a margin account and he will call you. You say, okay, the stock was $1, now it is $5. So you put $5,000. Okay? You put $5,000, so you need to bring me $20,000 right now, and you will have debts problems. That's why I'm telling you guys, stay away from smaller stocks when you are doing selling short. Stay away, because it is a lot of trouble, and people who don't know selling short, they can be in a big trouble when they sell short. So if you are a beginner, it's better to do puts option if you want to, $50, $70, $20, just to try. And you will be happy when you see some money that you have never seen before when the market is still continuing to go down. Okay? Even if you lose it, it's not a big deal. But the good thing is that you try, and you try your strategy. If you have strategy, you try it now. Either going up or going down. You try your strategy now. If you have some techniques, you do now. It doesn't mean that you should put in the market too much money. Even if you want to go long like today. Today in the morning, as I showed you, the whole market was going up for a lot of time, and then it goes down. So when it is going up 10 minutes, 15 minutes, half an hour, 1 hour, you are making money. You go long and you can make money. Is that true? Yes. But you should know how to day trade. If you don't have techniques, try to get a learning. Get a training. I'm not saying come to me and learn. It's not a problem for me. It's just people who are like serious to understand everything. They come and get my training, or they follow me in subscriptions like golden or silver subscriptions. It means I give information that you will never find out like online, because those people who don't trade in real, they can't explain anything. They will begin saying that thing, the CEO of this company has done this, and no, right now it has nothing to do with companies. It has to do with the news. So guys, try to understand what I am doing. Try to take my suggestions, because for me, I'm just trying to share with you guys. If you have ideas, if you have something that works for you, you can share with us, or you can come on my live on Friday at 9 o'clock. You can come on Friday 9 o'clock Eastern time, like always. You can check my channel. You should always find, except for Sunday yesterday, because I can't come on Saturday. So I do the live at 8 on Sunday. But it's okay, you will find a notification if you are a subscriber. So guys, if you are not subscriber, please subscribe. Please share my videos, whatever you like from my video, into Facebook or to anything. So spread the word, and our goal is just to be safe in this market. And besides, I'm telling you that since the Federal Reserve Bank has put 0 interest rate, so the banks will get a lot of money, and it is high time to buy a home if you think to buy a home, or in order to finance, or to buy a car. If the interest rate is so good, it will go down too much. This is the opportunity to do things when you can do before. Okay? In 2008, it happens the same thing. 2008, 9, 10, 11, we have the market crash. Everything a house that it was 200, you can get it with 100. Is that good? Yes. This is the opportunity in the market. You find opportunities to make money. These things doesn't come each year. So from 2008 to now, it's 12 years. 12 years and the market was going up. This year it's going down. So it's an opportunity. Whatever strategy you have, you can try it. And believe it or not, if this year is very bad, it can change when the stock market stops going down, and things will come up little by little up, because understand that when in selling short, things go so quick and you can make a lot of money in a shorter time. Okay? In a shorter time. But going long, it can take years. That's why investing is for the whole life. Investing, it is not you do it in one year. You do it all years in your life. And you can build a big portfolio with dividend investing I have another training about dividend investing if you are interested. So it means that usually you should have a strategy. You should have something you can rely on. If you don't have strategies, you can come to me. Go to my website. It's always in the video. You will, in the description of the video, you find my website. You find even my email. If you want to send me an email, if you have some trouble, for me, I'm just giving you my opinion, and you do whatever you want. Okay? So thank you very much, and I will do video as I can. I don't do videos too much like before, because I don't need that. But I make more videos to my subscribers, and because if I change something in the trading account, I will post a video and explain what I did and why. And you see that my live trading, it means what I do video. It means I explain things better than here, because I give my opinion according to my strategies. Now, for me here, I'm sharing general information about how I look at the market, but in my trading account, in the subscriptions, I will give you details and why and how and what to expect and the best way to do the thing. Okay? So thank you very much, guys, and see you next video.